Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Hi there and welcome to the ISE FX Options Weekly Outlook for April 26, 2010. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a weekly chart of the US dollar index. Well, as we suggested last week, the 79.5-80 focal zone is and still remains an important support level in the bigger picture. Now, we saw the dollar index bounce off of that to retest resistance up in the 82.5 focal zone. Now, we really do need to see a break beyond that in order for us to be confident with respect to a continuation to the upside, which would have us targeting the 84.85 box. Now, when we take a quick look at a daily snapshot, we can see here, once again, we illustrated last week a flagging formation that had been coming in, and again, the importance of a near-term support level now at 80.5, 81. We can see the Friday's reversal candle coming in after the test of 82, which suggests caution in terms of jumping in to try to participate in any continuation to the upside. Once again, a break above approximately 82.22 opens the window for a push into this 84.85 box. Well, despite an impressive effort, the U.S. dollar continues to have trouble gaining any ground against the Canadian dollar, as seen here in the ISE FX Options pair value CDD. Now, the CDD is back down to test support at the 99.5 100 focal zone, which we do believe is an important area of support. Now, the 100.5 to 101 level maintains itself as an important resistance level. We need to see a break above that in order for us to have any confidence of a reversal. Should we see the pair value break above the 101 level, we'd be looking at 102, 102.5 as a logical near-term target. That being said, the path of least resistance continues to be to the downside, and a break below 99.5 is likely to facilitate an extended move deeper. Let's take a look at the YUK, the US versus the Japanese yen, and as we can see here, the pair value thrust through our 93, 93.5 focal zone last week, which now becomes an important level of support. Now, this break beyond 93, 93.5 opens the window for an extended move where we'll be targeting the 95-96 box. However, should the pair value break below 93, we are open to the possibility of a retest of support back down in at the 91.5, 92 focal zone. The EUI tested resistance in the 75, 75.5 focal zone for the third time as the US dollar closed the week strong against the euro. Now, a break beyond 75.5 opens the window for a test of the 76, 77 box. However, we are looking at a possible reversal candle coming into play here after Friday's close, suggesting to be cautious of a possible move back down to test support within the 73.5, 74 focal zone. Well, the U.S. dollar failed to gain any ground against the British pound, as seen here in the ISE FX option pair value, BPX. Now, we were looking at a possible break above 65.5, signaling a move towards resistance up around the 67.5 focal zone. But at this point, looking at Friday's close and seeing the indecisiveness with this pair value, we are now open to the possibility of a slip down into the 63.5, 64 focal zone. Once again, should the pair value break above 65.5, we will be looking at a move that is likely to extend up towards that 67, 67.5 box. Well, the U.S. dollar continues to slide lower against the Australian dollar, as seen here in the AUX. The trend in force is being to the downside is being quite well respected. We were looking at a possible break above the 108.5, 109 focal zone as signaling a possible reversal. However, with such a strong trend in force to the downside, we are more likely to see the pair value slip down to test 106, 106.5. Let's take a look at a few of our key points. First of all, the U.S. dollar bounced at 80 and tested the 82 resistance level before reversing this past Friday. Now, Friday's reversal candle suggests that a pullback down to support may be expected. A break above 82.22 opens the window for a push higher on the dollar index. The CDD failed to find support at 101, and the U.S. dollar Canadian dollar is now back down at par, represented by our 100 focal zone. We suspect once again that this level will hold. However, the path of least resistance continues to be to the downside for the U.S. dollar against the Canadian. The YUK held support at 92 and thrust higher to close last week with a test of 94. A close above 94.5 opens the window for an extended move higher into the 95-96 box. The EUI closed last week with a test of resistance at 75. A break above this is likely to push towards 77. The BPX consolidated within the 65 focal zone and continues to show weakness. Until we see a break above 65.5, the path continues to be down for the U.S. dollar against the pound. The AUX failed to hold above 108, respecting the downtrend that has been in force for several months without a commitment above 108. 106, 106.5 remains a logical target. And this has been your ISE FX Option Weekly Outlook for April 26, 2010. As always, this is Jason Ayres of OptionSource.net. Thanks for joining me this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.